If you're investing in crypto or just keeping an eye on the future of digital currencies, brace yourself. The market is on a wild ride, and Bitcoin just hit the brakes. After reaching an all-time high of $111,000 in May, Bitcoin has pulled back around 7%, now hovering near $104,000. But don't panic. This isn't necessarily a crash. This drop is being fueled by technical market adjustments and growing macroeconomic uncertainty, especially after a U.S. court decision reinstated certain tariffs, which in turn pushed up Treasury yields and spooked investors. The big question now, is this the start of a bearish trend or just a healthy pause before the next rally? Experts say this dip might actually be a good thing. After one of the fastest bull runs in Bitcoin's history, the market needed a moment to breathe. And while prices are down, activity is heating up in a different corner, the derivatives market. Open interest in Bitcoin options hit a record-breaking $49 billion last week, showing institutional investors and speculators are still going all in. Meanwhile, Ethereum is stealing the spotlight. In just the past 30 days, ETH has surged 46% and has attracted over $321 million in ETF inflows. That's a clear signal. Investors are diversifying, and Ethereum may be positioning itself as more than just Bitcoin's little brother. But let's zoom out. The global landscape isn't exactly helping the crypto market stay stable. Ongoing trade tensions between the U.S. and China are casting a long shadow, with investors nervously awaiting the outcome of talks between Presidents Trump and Xi Jinping. Add to that Trump's recent criticism of the Federal Reserve and the European Central Bank's interest rate cuts, and you've got a cocktail of uncertainty. Despite this, some analysts believe Bitcoin's sideways movement isn't weakness, but strategic pause, letting the market digest recent gains before potentially aiming for new all-time highs. Technical indicators like the hash ribbons are flashing by signals, and Bitcoin's hash rate just hit a record high. Both signs that a rebound might be right around the corner. Back in Brazil, crypto ETFs and funds are regaining momentum, showing net asset growth after a rocky period. This bounce mirrors global trends and reflects renewed confidence from institutional investors. Overall, the sentiment among analysts is that Bitcoin is consolidating, stabilizing after its rally, absorbing the shocks from macro developments, and preparing for its next move. But the direction will depend on upcoming global policy shifts and geopolitical developments. We're in a high volatility zone, and for those who know how to read the signs, that means opportunity. So if you want to stay ahead of the curve and keep getting sharp, real-time crypto updates like this one, hit that like button and subscribe to the channel right now. It helps us a lot and ensures you never miss the insights that matter. And let me know in the comments, is this Bitcoin pullback a warning sign or a launch pad for the next surge? Stay tuned, because in the coming videos we'll continue tracking these moves with deep analysis, straight talk, and zero fluff. See you in the next one. And remember, in the world of crypto, knowledge is your most valuable coin.